Investors cast a vote of confidence in the country and the economy. The Dow Jones Industrial Average closes up 51 points. The Nasdaq gains almost 10 as Wall Street bets on a gridlocked Congress maintaining the status quo for business.
Home orders get nailed at 3 of the nation's big-name home builders. More evidence the housing industry is still in a slump. We'll get some analysis on what housing stocks the experts say you should buy, sell, or hold.
Speaking of housing, it looks like H&R Block is getting out of the subprime mortgage lending business. Seems that part of the business may be taxing the company as a whole.
The cash registers are ringing at Boeing. The aircraft maker wraps up a huge order for its freighter jets at the expense of its biggest competitor, and it might be the start of something even bigger.
I'm Paul Kangas.
And I'm Susie Garoff. This is Nightly Business Report for Tuesday, November 7th.
Nightly Business Report is made possible by
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments. Gain from our perspective.
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. Wall Street was a winner on this election day. The Dow rose 51 points after hitting a new intraday record of nearly 12,200. The Nasdaq added nearly 10 points. Investors are feeling confident about the economy, falling oil prices, and corporate profits. As the earnings season winds down, corporate America is celebrating another period of double-digit earnings growth. Suzanne Pratt looks at why the performance surprised even the experts.
Sometimes Wall Street does get it wrong. A modest slowdown in quarterly earnings growth was expected for the third quarter. But now that more than 80% of S&P 500 companies have reported, that slowdown has not materialized. So far, S&P 500 profits grew nearly 19% in the third quarter, stronger than second quarter growth and the best period of the year. On top of that, the third quarter number is well ahead of the 14% expected just over a month ago. And it will likely be the 13th straight quarter of double-digit earnings growth for the S&P 500 index, a winning stretch that has only happened once before in the mid-90s.
Generally, companies are just really well honed in on a strong economy, reasonably strong economy, and they've gotten their costs really well under control. So basically a lot of things clicking at once.
The basic materials sector reported the strongest earnings growth, while consumer staples posted the weakest. And the surprisingly strong third quarter results have helped the stock market in recent weeks. Since October 1st, the S&P 500 is up nearly 4%. Some market pros say a variety of factors is behind investors' enthusiasm for stocks.
One is the seasonals. We're in the favorable period for stocks. Also, the earnings picture, as well as the valuation, still looking fairly attractive. Oil prices having come down, and also a favorable outlook by the Fed. I think all four things really have contributed.
As for the future, a significant slowdown in quarterly earnings is expected. Thomson Financial predicts profit growth will decelerate to about 10% in the fourth quarter and fall under 10% in 2007.
We at Thomson Financial feel those estimates are very conservative. And historically, that isn't all that bad because 7% is the historic average for earnings growth for the S&P 500 in more normalized times.
If the fourth quarter manages to eke out profit growth of 10% for the S&P 500, that would mean 14 straight quarters of double-digit growth. It would also mean the first time that has ever happened for corporate America. Suzanne Pratt, Nightly Business Report, New York.
Wall Street staged a solid morning rally as oil prices headed lower and Boeing buoyed the blue chips on a big order we'll tell you about shortly. At 1 p.m., the Dow posted an 86-point gain, a record intraday high, while the Nasdaq Composite was up 24 points. As traders moved to the sidelines to await the election results, the market faded, but it still ended moderately higher. Dow Industrial Average closed up 51.22 at 12,156.77. Nasdaq Composite up 9.93 at 2375.88, while the Standard & Poor's 500 index rose 3.06, ending at 1382.84. In the bond market, the 10-year note rose 9/32 to 101 and 21/32, putting the yield at 4.66%.
There's more evidence tonight that the housing market is crumbling at all ends of the spectrum. 3 of the nation's big home builders reported sharp order declines today. Luxury home builder Toll Brothers said orders fell 56% in its fiscal fourth quarter. Conventional builder Beazer Homes saw its orders drop by 58% in its last quarter. And orders at WCI Communities, which builds high rises and conventional homes, plummeted by 82%. Those order levels are closely watched by the housing industry because they serve as a barometer for the revenues the companies will get when homes are delivered 6 months to a year later. Well, joining us now for more analysis about the outlook in housing, William Mack, home building analyst at Standard & Poor's. Hi, Bill.
Hi.
You know, this week, Alan Greenspan, former Federal Reserve Chairman, was quoted as saying that the worst in the housing slump is over. And yet today, the CEO of Toll Brothers said he doesn't see the end in sight. So who's right here?
Well, they may both be right. It depends on what statistic you're looking at. If you look at unit orders across the board, and Beazer and Toll Brothers, who reported results today for September and their October quarter ends respectively, both showed unit orders approaching declines of 60%. That can't get much worse in my estimation. However, I think other figures that you might look at, including operating margins and gross margins and debt levels and inventory levels, those are all still worsening.
But it seems to be kind of a disconnect with the other news that we're reporting on the economy. It's a pretty strong economy still, low unemployment, gasoline prices are coming down, the stock market is rallying. What is it that's making consumers so cautious about ordering or buying new homes?
Well, a lot of these factors have been as good as they are now, and in particular job growth, which is a very important determinant for new home demand, is actually down from past levels. You mentioned the stock market. There is some correlation, not with the stock market so much as consumer confidence, which itself is tied to the stock market. With the Toll Brothers especially, and consumer confidence is important. And consumer confidence has actually fallen from record levels. Interest rates are a little higher than past levels. They're still accommodative. I don't think it's any one thing. It's mostly that we've become accustomed to very accommodative factors. And I just mentioned the 3 most important ones: interest rates, job growth, and confidence are in terms of demand, and we've had those, and so now we need to see something different, and maybe something different is price declines on homes.
What kind of guidance were you getting from CEOs this earnings season, and not just from Toll Brothers and Beazer, but the others as well, about the outlook from here?
Well, it's all very similar to what Toll Brothers and Beazer's management is telling us is what we've always known, that you can't really look more than 3 to 6 months into current demand to forecast. But what they're telling us is that 3 to 6 months out, it doesn't look any better. I don't think they're telling us that things will further unravel, but I do think things aren't likely to improve soon.
When I last talked to you in the summer, there was only one housing stock that you favored, that you were recommending, and that was Centex. What is your view today?
I still have a buy recommendation on Centex. It's our only buy recommendation in the group. Same reasons. Centex still has among the best track records in the industry. They've got very low debt levels relative to the others, and a much healthier balance sheet. I think they're best able to weather the downturn, and in fact, empirical evidence past downturns would bear that out.
What about your views on the other home building stocks, whether it's Pulte or Lennar or KB Homes? Are they sell or hold, or what's your ranking on them?
I've moved away from sells or strong sells on the what I would call first-tier home builders, the Pultes, Lennars, and D.R. Hortons. And have only focused on those that I have weak finances or a lack of geographic diversity, okay. And those are Lennar, NVR, Meritage, and Hovnanian, and I think those are the weakest of the group.
All right, Bill, we're going to have to leave it there. Thank you so much.
Thank you.
We've been speaking with William Mack, home building analyst at Standard & Poor's.
It's election day and votes are being cast nationwide, but There's already one big winner in this campaign season, the local television broadcasting business, and anyone else who sells advertising space to political campaigns. As we continue our series, Capital Impact 2006, Washington Bureau Chief Darren Gersh looks at the financial impact of campaigning for the candidate.
36 races for governor, 205 ballot initiatives, and dozens of competitive House and Senate races. Analyst Evan Tracy says it all adds up to a big win for local television broadcasters.
It's essentially silly season. Political campaigns, they're not buying ads the day after the election, just like retail doesn't buy ads the day after Christmas. So in other words, you had customers with money and desire, and that's always a good environment in which to make money.
This is Good Morning Cincinnati live.
Total spending on political TV ads is projected to top $2 billion this election. In tight races, some interest groups and political parties were buying so many ads, broadcasters were charging 3 or 4 times the going price for a political spot. But the biggest winners in percentage terms are those companies owning television stations in mid-sized markets with several competitive races. PQ Media estimates station owner EW Scripps is likely to see almost 60% more spending than stations in less competitive markets. The New York Times, Sinclair, Journal Communications, and Gannett are also big winners, reaping 50% more spending than station groups with fewer competitive political races. And analysts say more station managers are smiling this election because the competition is spread across the country.
In 2004, because there were only 17 states that the presidential election found as the battleground states, there were only 96 markets that saw additional spending. In this election, 90% of the markets will see some type of additional spending because of the high number of contentious races, such as 31 of the 36 gubernatorial races.
Tracy tracks not only where campaigns are spending their money, but also what candidates are saying in their ads. A good leading indicator of what the next Congress will do.
They're going to take a hard look at health care again. They're going to take a hard look at energy and tax breaks. These are things that I think are on the table based on the rhetoric we've seen in the ads in this election.
And now that it's safe to watch TV again, local broadcasters will be going back to the car dealers and jewelers who sat out the election and remind them this is the perfect time to advertise those Christmas season specials. Darren Gersh, Nightly Business Report, Washington.
A big win for Boeing today. FedEx announced plans to buy 15 new Boeing 777 freighter jets with an option to purchase 15 more. It's a big loss for Airbus. That's because FedEx canceled an order for 10 of Airbus's new A380 planes because of mounting delays in delivery. The Boeing planes are the world's largest twin-engine cargo carriers and will add 2,200 miles of range to FedEx's current long-haul aircraft. FedEx says the new planes will be used to fly among hubs in Asia, Europe, and the U.S. in less time than it takes today and with less fuel used. Airbus may be about to lose another client, Paul. UPS says it's reviewing its decision to buy 10 of the A380s, but no decision has been made yet.
Boeing shares took off on this development, Susie, and we'll see them in our Stocks in the News segment as it takes flight tonight. New York Exchange volume leader on 23.5 million shares, Nortel Networks, losing 26 cents or 11% of its value. Company came in with a third quarter loss of 2 cents a share versus a loss of 3 cents last year. Revenues were up 17%. And then the company declared a 1-for-10 reverse split. Motorola, 91-cent loss. Lucent moved up 4 cents. Pfizer, 30-cent gain. Lowe's companies closed up 51 cents despite a downgrade by UBS Financial from neutral to reduced. UBS did the same for Home Depot, which closed up a penny. Didn't have much impact today. Sprint Nextel, 49-cent gain. ExxonMobil down 38 cents. GE, 27-cent gain. No change in Texas Instruments, and Time Warner, 10th in volume, was down 15 cents. There you see Boeing doing very well, up $4.37. That gain boosted the Dow Industrial Average by 35 points. And, of course, you heard about the big order they got from FedEx, whose stock incidentally rose $1.09 to $115.03 per share. On the big gainers list, AmRep Corp up $6.19, companies in the real estate business, and it told the New York Exchange with regard to that big move in its stock, its policy is not to comment on unusual activity in its stock. H&R Block up $1.39. Company cut its 2007 guidance because of the near-term outlook for its mortgage operations, but it is mulling over the possible sale of that business. Meanwhile, Soleil Securities upgraded the stock from sell to a buy. SWS Group, this is the holding company for Southwest Securities, up $2.90. Big earnings, first quarter 57 cents up from 41 last year. Revenue's up about 10%. And then Emerson Electric up $4.87. Fourth quarter results higher, $1.29 versus only 101 last year. You might say Emerson, good earnings. Company boosted its quarterly dividend 18% to 52.5 cents a share and also announced a 2-for-1 split. Nice combination. Technical Olympic down $3.79, huge percentage drop. The home builder said it needs more time to file its third quarter financial report in the expectation there'll be a large change in results due to asset impairment charges. Anthracite Capital off $2.50 a share. Third quarter earnings came in at 22 cents, 8 cents below the street estimate, down from 28 cents last year. Friedman Billings Brokerage downgraded it from outperform to just market perform. And Pike Electric off $1.58, lower earnings. First quarter only a nickel versus 58 cents last year, and revenues tumbled 31%. Google topped the active list on NASDAQ, down $4.38. Cisco 16-cent gain, 80-cent rise in Apple Computer. Microsoft was up 11 cents, and that's despite a downgrade from Bank of America from buy to neutral in the belief the company won't have strong earnings growth until 2008. Research in Motion up $2.41. Canadian regulators have banned top executives and directors from trading the stock because the company is late in filing its second quarter financials. Intel, 2-cent loss, 2-cent gain for Yahoo. Broadcom up $1.73. Teva Pharmaceutical, $0.50 loss, and Comcast stay down 21 cents. Infonic, $1.94 gain, third quarter loss of only 3 cents versus a loss of 12 cents last year, and the company says it'll have 2006 earnings of 58 to 63 cents a share. And then we're back, here we go, Fuel Technology, that's the one we want to see, up $4.34. Third quarter earnings almost doubled to 9 cents versus only a nickel last year. Company boosted its 2006 revenue forecast. And those are the stocks in the news tonight. Susie?
Paul, the World Trade Organization today formally invited Vietnam to join the group as its 150th member nation. Vietnam's National Assembly now has 30 days to ratify the accord approving the move. Vietnam's been lobbying to join the WTO for more than a decade. It has the fastest growing economy in Asia after China, with GDP growth projected at almost 8% this year. Membership in the WTO gives Vietnam more access to foreign markets. In return, it must drop high tariffs on foreign imports and get rid of subsidies for state-owned companies.
Tomorrow, the high price consumers pay for not shopping around.
Here's a look at what's happening tomorrow. The government's weekly assessment of crude oil and gasoline inventories comes out. As for earnings, Cisco Systems, Chiron, and Federated Department Stores are all scheduled to report.
The stocks of big companies have had some big gains of late, leading many market observers to proclaim that the long-awaited comeback of the large cap sector has finally arrived. And one mutual fund that's near the top of that class is Old Mutual Large Cap Fund. After several years of mediocre performances, it broke ahead of the pack this year. For the year to date, it's up more than 17%, beating the Standard & Poor's 500 index by more than 5 percentage points. Jerome Heppelman has managed Old Mutual Large Cap for the past 2 years, and he joins us now from Philadelphia. Jerome, welcome to Nightly Business Report.
Thank you very much.
First, let me ask you about your stock picking method. Would you say that you mainly look for stocks that are undervalued?
I do. I prefer stocks that are undervalued. The other thing I'm trying to mix into the equation is near-term dynamics and long-term growth, and try to make a rational trade-off between those three areas.
As we noted, your fund is doing substantially better than the S&P 500 index, yet 80% of the actively managed large cap funds trailed that index in the third quarter. Where do you think those managers went wrong, and what did you do differently?
Well, I would imagine quite a few of them were more focused on what was in the benchmark versus companies that they thought were the best values. And when you back out expenses after those that are very much mimicking the benchmark, it's tough to outperform it. And I think others were probably just in some sectors that had been very strong performers over the last couple of years and unfortunately weren't this last quarter.
Okay. Well, one factor that's helped your fund is your portfolio's heavy weighting in insurance stocks such as AIG and Berkshire Hathaway. But is that group up simply because there have been no major hurricanes or major disasters this year?
It surely didn't hurt, I'll admit that. But what we saw in the insurance group was fairly low valuations, some very good, solid near-term dynamics in terms of pricing because of the fears of the hurricanes that we saw last year, and great long-term business fundamentals.
Okay. Now, you've also been a big holder of Microsoft and General Electric stocks, which have a hard time moving. Why do you like those companies, and do you still see those stocks as undervalued?
I do see them both as undervalued. There's still very large weights in the portfolio. Microsoft, it's over the last 5 years, has almost returned $100 billion to shareholders. $3 of it was a special dividend a couple years ago that if you add that to the stock price, people wouldn't think it's been such a laggard. And we're in the middle of a product cycle like the world's never seen before. GE is also a company that's very focused on returning cash to shareholders. Huge dividend yield there, 2.8%, and also growing very quickly because of the strength of the GDP worldwide.
You make a good argument in both cases. For the record, incidentally, Jerome, do you personally own any of those stocks?
I do. I own most of them personally, and I also own quite a bit of my funds, and I own them in the funds as well.
Now, we only have less than a minute left. You also manage several other mutual funds, including a mid-cap fund. Do you think that large cap will outpace the other groups moving forward?
Personally, I would guess so over the next few years. It's always hard to tell, obviously, but small and mid-caps have had a good run over the last 5-6 years. I do think it's probably a large cap's turn in terms of valuation.
Okay. Over the last few days, we've seen a lot of merger activity. Do you think there's potential for many more companies to be swallowed up, and if so, will that benefit or hurt the large cap sector?
Well, there's no doubt there will be more acquisitions by the private equity. There's been a lot of capital put into that space.
All right.
And go ahead.
Very good. Jerome, I want to thank you very much for your insights.
Thank you very much.
My guest, Jerome Heppelman, portfolio manager of the Old Mutual Large Cap Fund.
And recapping today's market action, a vote of confidence by investors. The Dow gained 51 points and the NASDAQ rose almost 10. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on PBS.org. And finally tonight, you know you're a success when someone wants a piece of your action. Take, for example, the $26 million showing at the box office this weekend for the movie Borat, a mockumentary about a journalist from Kazakhstan touring the U.S. Now, a Turkish cyber celebrity says he was the inspiration for the character and he wants to be paid for it. Mahir Kagri says he wants an apology or acknowledgement from the actor who plays Borat, Sacha Baron Cohen. Barring that, he wants cash. Cohen says, though, the inspiration for the insipid character was actually a Russian doctor who Cohen found hilarious, albeit unintentionally. In any case, Paul, the government of Kazakhstan isn't laughing. and is considering legal action against the comedian.
Sounds like this is one comedy that can turn into a bit of a tragedy.
Yes, it does sound that way. That's Nightly Business Report for Tuesday, November 7th. I'm Susie Garib. Good night, everyone. Good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbye.
Nightly Business Report is made possible by
Is your nest egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested